Hey guys, this is Wooly from SuertePanda.com. So today we're going to talk about something a little bit different. We want to talk about another alternative to the Wheel of Fortune strategy, and this is going to be a video on a dragon diagonal, as you can see here. A dragon diagonal is basically an upsized diagonal spread, or what I'd like to call a rich man's covered call. The difference between a rich man's covered call or a poor man's covered call is that normally for diagonal spreads, a poor man's covered call, or whatever you want to call it, is that they're generally closer in time. So for example, if we're trading the November and December expiration cycle, you would short something in the front month, in this case November, and then we go long another option in a back month, in this example a December expiration. But with dragon diagonals, we're talking longer duration. Usually we're, instead of a shorter term back month, we're using a longer term back month, ideally using a leap. And a leap option is usually an option that has an expiration cycle 9 months or more. So why would you want to put on a dragon diagonal as opposed to a Wheel of Fortune? Ideally, with a Wheel of Fortune, when you sell a put to start the process, you want to have high implied volatility. But what if the stock is, it's really hasn't done much in a while, and the implied volatility has really shrank in general? This is when you would want to consider buying a longer term call option instead of selling a put option, because the cost that you're paying outright should be lower. So let's just use an example of say DOCU. This has been a really amazing high flyer. I wouldn't consider it a low volatility stock, but the volatility has been lower, and I expect it to be higher in the coming months, especially coming into their earnings cycle somewhere around December. So what I want to do is start the process because I'm actually already invested in DocuSign, but I want to add like a small position. I think it's just something that I'm putting on for myself. It's not a formal trade recommendation to anybody. That's just what I'm putting in my own account. But I think DocuSign has a bright future ahead of it, especially with the work from home revolution, if you want to call it that. So I'm interested in leaps. Next, I'm going to show you on the Tastyworks platform different versions, starting with 9 months and then working our way through different expiration cycles, and I'll show you how you can, or what my plan is to trade this. When you short the front month cover calls, you can eventually reduce your cost basis for the stock that you want to trade. In my case, it's DocuSign. And there are probably others that I'll throw in as well. I had my eye on FedEx and also Visa, but I don't want to put out such a high amount of money outright. And I thought, it might be helpful for you guys to maybe see or see what your options are, so to speak. No pun intended. So I'll show you my platform right now. Hey guys. So I'm on the platform right now. Unfortunately, it's after hours, but I think we could still use this as an example. So I'm looking at DocuSign right now. The IV rank is less than 50. It's almost 30. Ideally, it would be great if the IV rank was a little bit lower, so I can buy the leap at a cheaper price. But we can't always get what we want. I could wait, but if you notice, like the stock is down another $6 today, and you know what? I think there's still some upside left, especially in future earnings. I think once the election is over, I think the market will kind of settle back in, and I think it'll start ripping higher again. But who knows? This market could just continue to tank. But I figured if I give myself over 2 years, the market should rebound by then, and then after that, who knows? And then hopefully by then I'll take this trade off at a nice profit. But let's see. So at around 230, I'm gonna for the leap price, I'm just gonna estimate that I can get at least another 10% on top of this. So just ballparking it, it's probably like another $23, and that'll bring me right to the 250 strike price. So I'm gonna go ahead and click in the ask. Hopefully in the morning, um, I can get filled at mid price. And then my plan is if I don't get filled at mid price right away, usually what I do is I after like 5 minutes or so, I cave in like another 5 cents or so, and then another 5 minutes if it still doesn't get filled, I lower it down another 5 cents and so on and so forth. So let's see what I could sell the. I think I can get away with even though it's the November expiration, it's down to 32 days. I think I can still sell something above 250. Oh yeah, the premiums are pretty juicy here. So it's interesting. The 850 I'm sorry, the 260 strikes has 848 contracts of open interest, but then a 265 has nothing. So I'm gonna let's see. The one standard deviation is a little bit away from here. I think if I'd sell it for 270, I think that'll be a good 18 delta. I think that could be a good enough amount. So I'm gonna start off the trade at around $6,000 or so. In order to get filled, I might have to increase it to 620 and then 625 or 630, whatever it turns out to be. Um, but but I just wanted to show you kind of like my thought process. The worst thing that could happen is if for some reason if DocuSign they blow out their earnings and they shoot above 270, I think that could be a good thing. By then the 250 strike out in the January 2023 leaps should also have a nice corresponding increase. And, and then because I don't want to necessarily get assigned right away, we just take off the trade as a package, if for whatever the the strike price is at the time if it goes above 270. So let me go over to like an Excel spreadsheet and show you what you can what we can potentially make if you guys also decide to jump in as well. So let's see. Let's take the worst case scenario. So let's say I get filled at not at the mid price, but if I get filled at the I have to get filled at the ask and the bid course for the leap and then also for the short option. So let's go over to the spreadsheet real quick. Um, 1 second. Okay, so $3 and then 65.50. So let's say I have to wind up paying 6,550 bucks for the option. Every I would intend to sell um, an option at at whatever the prevailing 20 delta or or depending how the market acts, I might move up or down deltas depending on the volatility. But let's just say I can consistently get uh, half of this because I'm gonna follow the tasty trade mechanics and assume that I only collect um, half of half of the initial credit received. Oh, I'm sorry about that. That's embarrassing. I meant to put a. Let's just divide by two. That's embarrassing. So let's see how many estimate number of rolls I can get. So let's just say um, that's 823 days roughly. But I'm dividing by 24 because that's what I'm estimating the number of days to expiration. Normally, based on the tasty trade mechanics, you generally try to close out your trades 21 days left to expiration. So assuming you started at 45 days, which is what they recommend, so you can get them the greatest amount of theta burn. Um, you want to start off ideally within at the 45 day uh, when days to expiration. They also give you a little leeway depending on the I'm sorry, the implied volatility rank or the VIX at the time. If volatility is really high, you can get away with selling um, strikes at 30 days, or if implied volatility is really low, you can get away with selling at the 60 day mark, so around 2 months. Let's just keep it simple. Let's because we're just doing an estimate right now. So let's say for DocuSign, for this big leap, um, I want to see roughly how many of these. So I'm gonna round this down to 34. So I'm gonna do 100, 150 multiplied by 34, and I could potentially pull almost $5,000 in premium. Because there might be times when I don't exactly get what I want, and this is a good way to kind of ballpark. And I can actually potentially get the cost down to almost 1,500, which is a big savings when you think of what DocuSign is trading at right now. It's 228. So if I had to put up $100, sorry, 100 shares of DocuSign, that's almost $23,000. And if you notice from like the previous screen, let me see if I can just bring it back for just a second. Um, the buying power effect, as you can see, oops, sorry, over here, it's I'm already getting I feel like a good deal at $3,000, but that buying power effect changes based on DocuSign's implied volatility as well. So tomorrow it could be 4,500, or the market gets really volatile, like it could even double. I could be paying $6,000, but that's still a lot cheaper than um, what it would have to pay outright for the stock. That's why a lot of people like leaps. Um, in this instance, because DocuSign currently right now doesn't pay a dividend, so it just makes sense for me to. I want to get the upside of DocuSign without putting up all that capital. And by the way, I'm on a portfolio margin account. So like if you're wondering if you're looking at your own account, how come you have to put up probably $15,000? That's why, because portfolio margin, it takes into account my other positions, and it offsets, and I believe they beta weight everything um the SPY or the XPX to kind of get a gauge of market movement. And then also they have this whole crazy formula. I guess in the if you guys want, I'll also do another video on that as well. To see on portfolio margin, but we'll see. Let's go back to well, actually let's go to the next stock. So I also have FedEx on my crosshairs. For this one, I'm not as excited. Um, but that could change. I think um, it has some room to move, but I think once there's a vaccine out, maybe people will probably start heading back to the malls and buying stuff in person. But who knows? I think there's still some upside left. And if you notice, the implied volatility is really low here. So at the implied volatility rank is 19. So I think there's also a potential uh, leap opportunity. The only bad thing here is you might not get the well, you mean if you buy the leap, you're not going to get the dividend, but I think it could be worth it. That's why I don't want to go out too far out in time for this particular one. So let's see, 180 days. That's really 6 months. So that doesn't really qualify as a leap. So I'm gonna go to the December 17th, 2021. That's a little bit over a year. So I'm gonna do this something similar. So let's see, 10% of 282. Let's call it the 310 strike. So again, I'm gonna do something similar here. I'm gonna buy this. Uh, Normally I would try to get filled at mid price, but let's see what I can get for the November short option strike as well. So I'm gonna sell it somewhere above that. So let's see. I think the 320 might be good. So again, normally I would try to get this at mid price if I can, and then move up from there. So let's see, $1.83. So let's go back to the spreadsheet again to kind of see the potential here. So 183, buck 83 at the, and then 3,335. So I'm gonna do something similar. So we're going out in time here at the 424 days for this particular expiration cycle. So again, I'm gonna estimate again that I can sell it out at 45 days ahead, and then within 24 days, I'll be able to roll the option to the next strike. So there's about 17 options I could potentially sell. Again, I rounded down, so 50%. I'm gonna round down to 90 times 17. So that's also again it's also a pretty good cost savings if I can bring down the cost of this option a lot. Oh man, what am I doing today? I had this flipped. Let's do that again. But I guess you guys can get the point. I'm bringing down the cost of this option down to 2,205, and then I'm making the assumption that FedEx will be able to hit that new strike at 310. And I think it's a reasonable expectation, especially within um, a year or more. So, and then let's take a look at my another stock I have my eye on. Again, it's a shame to kind of miss out on the dividend along the way, but when you're doing a leap or a dragon diagonal, um, you can see the power. You're bringing down the cost of the options of the of your investments down so much. Let's just do a quick. Just curious to see how much you save. Divided by. Oh wow, it's almost a 40% discount. And then for the really far out leap, let's. Wow, that's crazy. 78%. Um, well, I mean, where else are you gonna get these kind of crazy discounts on a stock? But again, this is assuming that you can get the exact same type of premium. It'll probably wind up being uh, more than that, but it's still crazy that you can get that much of a discount. I guess assuming you're willing to hold on to the leap for this long. And for FedEx, it's actually not really 9 months, it's more like 13 months. And then for Visa, I think I want to stay within a year as well. Um, because I had my eye on this as well, but the volatility uh, as time went on, it's kind of lower than what it was. Especially the IV rank right now is 23, but I think I can also see great potential here. So let's go back to the platform real quick. Um, okay, so let's see what we have here. Again, I'm gonna ballpark it. Uh, Pretty sure Visa can hit 220. So okay, I mean almost $1,300 for this 220 call strike, and then let's see what I can get for the short option. I'm gonna go above. Ooh, oh man, the options look really skimpy here. Uh, well, let's see. So if I sell this, I only get maybe 47 cents. Oof. Um, but then again, like you're getting a pretty good discount at the 1 year time frame. So you're only paying $1,300 to control a almost $20,000 stock, so it's not too bad. So there's always trade-offs here in trading. Um, okay, so let's do some math here. 47 cents and 12.90. Okay, so let's flip back to the handy dandy Excel spreadsheet here. All right. So so again, by now we should be able to. I'm hoping you guys can do this on your own. I'm not using anything crazy here. It's just a regular old Excel spreadsheet. So again, let's figure out the number of days that we're working with here. Let's go. Let me just go back real quick. So 333 days divided by 24. Okay, so we have about 13 rolls here. Um, so 13 times 23.5, 300. Okay, so the discount here is not that. Well, it's pretty decent. It looks like it's, let's see. So you're getting a pretty decent discount. I mean, 24%. Because the price is already so low that it doesn't seem as great as compared to DocuSign or FedEx, but I think it's still you can see the power of these rich man covered calls or dragon diagonal, whatever you want to call it. So I hope this helps you to kind of like visualize like the cost savings, especially if you're willing to go out long term on a stock that you like or stocks that you like. And for some reason, really helps those that you don't really have a huge like $1 million account yet, and this is how like people of a little bit more modest portfolios. Um, and I know for some of you it seems kind of weird to call like 100 or 200, $300,000 portfolios as modest, but compared to like some of the big guys out there, this really helps us. You know, we're not like beginners, but we're not like the big fish yet. We're not whale sized. We're probably like more, I guess like a tuna sized. Like compete against like some of these whales, like how they're getting these ridiculous percentage gains. But this is one way to do it. When you lower your cost basis so much that, and you're controlling the same amount of stock, but you get the similar upside. I mean, these are really powerful tools. I do have like a few more like big crazy option strategies. Now, keep in mind like these are obviously more risky um, because of let's say like the market just like takes a huge dump. Um, all these positions will be will be in trouble. Um, but in most cases, I think within a year or so, like most of these are pretty good companies, and I think they'll survive and they'll continue to thrive no matter what. So if you guys like this type of content, if you want more, please consider liking and subscribing. That really helps me out. And then also, like, I want to also customize the content so that it's more relevant towards intermediate level option traders such as ourselves, because there's a lot of beginner content, and I don't want to rehash the same old stuff. And chances are, if you're already a whale, you probably don't need this type of content. So I think like like the up and coming intermediate traders could really benefit from this type of material. And eventually, I want to have like a kind of like a community where we can talk more like intermediate, more advanced, like tasty trade topics. I think that would be really cool. I think there are some that are already out there, but they're kind of more like more secretive, and I want to make this like a little bit more public. And that's why I think like beginners that are like starting to transition, I think this will be a good place for them to be as well. I remember when I first started out, like I didn't really have stuff like this to help me out. I mean, I mostly read books and meet with other traders in person, but in this new world, I think this could be really helpful. Um, so yeah, so thank you very much for watching, and I'll see you guys in the next video. Thank you so much. I appreciate you guys.